Hello everyone. In today's video, we are going to discuss the various types of accounts, various rules of debit and credit, recording the transaction into journal. So we are beginning with the rules of we are beginning with the types of accounts. So we have in total 3 types of accounts. One, personal account, other one is real account, and the third is nominal account. So when we talk about the personal account, we are talking about a person. So the person can be creation of God, a person can be creation of law. So any person who is either a creation of God or creation of law, both will come under personal account. Then we talk about various assets in the previous videos. We have the assets long term and short term. So when we talk about real account, we are dealing with various types of assets, irrespective of whether these are short term in nature or long term in nature. So if we are talking about the account of machinery, we talk about account of furniture, account of buildings, land, everything will fall under real account. Stock of goods also will fall under real account. Then we talk about various expenses and gains, incomes. So all the expenses and gains that we talk in accounting, they fall under nominal account. So nominal account deals with all kind of expenses and losses, all kind of incomes and gains. So dealing in detail with the personal account, it includes the accounts of persons with whom the business deals. So I have told you we can have a natural person who is the creation of God. For example, Mohan, Sohan, Radha, Shyam, or anybody else who is a natural person, who is the creation of God, who is a real human being. Then we talk about the second category under personal account, which is artificial personal account. So artificial personal account, it has come from company's account. The company's account says the company is an artificial legal person under the creation of law. So therefore, we have an artificial person also apart from natural person. So artificial person includes all the accounts of corporate bodies, institutions which are recognized as persons in the business dealings. For example, account of a company, account of a cooperative society, account of a club, account of government, account of insurance company, account of bank, etc. So very important point here to note is a bank is a personal account. Many of the students, we have noticed that what mistake that they commit in the exam is they put bank as real account. No, bank is a personal account. We are talking about banking institution, and any institution, any company, that comes under the category of personal account because that is an artificial person. Then we talk about a representative personal account. So I will speak about representative personal account once I complete the all 3 categories, especially the nominal account. So I will come back to the third category of personal account after completing the nominal account. So I'm moving on from this slide. Next we talk about real account. Now real account, as I told you, they are the accounts related to assets. So assets can be tangible assets, assets can be intangible assets. So therefore, real account can be tangible real account, it can be intangible real account. So assets are those resources which provide benefit to the firm for a longer period of time. That is a long-term assets. All those resources which provide benefit to the firm for a short period of time are within a year are short-term assets. So when we talk about real account, we can categorize this in tangible, intangible. So tangible assets or tangible real account means all those assets which we can see, touch, feel. So, for example, cash, building, furniture, stock, machinery, land, etc. Anything which we can see, touch, or feel. They are they're in the category of tangible real account. Then we have intangible real account. For example, goodwill, patents, copyrights, trademarks. So all such intangible real accounts are those accounts which we cannot see, which we cannot feel, which we cannot touch. So, therefore, these are basically on papers. Calculations are done only on papers, they do not have any physical presence. And therefore, since these cannot be touched, feel, or um, seen, so therefore they are under the category of intangible assets, intangible real account. So the question comes, what are patents, what are trademarks, what are copyrights, goodwill? So goodwill is the reputation of the company which can be calculated through various methods. Again, patents, these are the exclusive rights which are given to an individual or a corporation or a group of individuals for the innovation and invention, any innovative practice, any innovative procedure, method, etc. Copyrights are the exclusive rights given to an individual or a corporation for the originality of work. For example, we have seen the authors writing various books. We can see authors writing various research papers. We can see the music composers. They do the copywriting of their tunes, etc. Trademarks, these are the logos, these are the names of the unique names of the companies which are given exclusive rights to the company or the individual, etc. So these are intangible real account. Then we come to the nominal account. These accounts are opened in the books to simply explain the nature of the transaction. For example, here we are talking about all the expenses and losses. We are talking about the incomes and gains. So salary is paid to the manager. That salary becomes your nominal account. Rent is paid to the landlord. Here salary and rent both are expenses. We can have losses as well. Bad debt, debtors which do not pay or which have not paid the amount back to the company on account of credit sales. So these are bad debtors or bad debt. So these are losses for the company. Incomes can also be a part of nominal account. So income, suppose we have received the rent of the building, we have received commission, we have received the honorarium. So all these are incomes. And suppose if we have sold the machinery and we have earned profit on the sale of that machinery, so the profit on sale of machinery would again be income or gain for the firm. So any income or gain that has happened in the firm or any expenses or losses which are incurred in the firm will be categorized in the nominal account. So I hope you have till now understood the three categories of accounts. So here we have a small exercise. You need to identify the type of account. So if we talk about cash account is a real account, is an asset. So therefore real account. Talking about furniture, again it is an asset. So fall under real account. Machinery account, again it is an asset, real account. Okay, I just forgot to talk about representative personal account. All right, so representative personal account, these are the accounts which represent a certain persons or group of persons. So if any prefix or suffix is added to the nominal account, so nominal account we are meaning rent account, salaries account, or any expense or income account, right? So if any suffix or prefix is added to the nominal account, that gets converted into representative personal account. Now, for example, if rent is due to the landlord, that means rent is due but not paid. So in that case, if rent is paid becomes nominal account, if rent is due but not paid becomes representative personal account. Why? Because it is representing the non payment of money to a hidden person which is a landlord. right? So rent is not paid to the landlord despite of the fact that due date has come. So here we are referring to the landlord. So here we will mention the account which is called outstanding rent account. Outstanding means due but not paid. Similarly, if we have the salaries account, salary account, if salary is paid becomes nominal. If salary is due but it is not paid, then it becomes representative personal account and we will write outstanding salary account. Correct? I hope this point is clear to everybody. Now we talk about the exercise again. So cash account is an asset, therefore it will be real account. Furniture account is an asset, therefore it is real account. Machinery account is an asset, therefore it is a real account. Salaries account, I just told you salaries is an expense, therefore it will come under nominal account. Interest account, again it can be an expense, it can be an income also, but both the things are they are in the category of nominal account. Carriage account, carriage means transportation charges paid, so this becomes an expense and therefore becomes nominal account. Alka stores account, it is a supplier, Alka is a supplier here. Now Alka stores account is a personal account because it has the organization, it has a firm with the name of Alka Stores. So it's a personal account. So which category? Artificial person. Then we have Bhupen Dalal's account. Bhupen Dalal again is a person, artificial person, and brackets may mention hai customer. So therefore these are personal account. When we talk about next one, B.S. Shah, loan provider. So loan provider B.S. Shah is a person, therefore personal account. Moving on. Loose tools. Loose tools are the tools which are helping the production process, and screwdriver, hammer, etc. These are the loose tools. So loose tools are assets for the firm, therefore real account. Bank of India account. It is a bank's account, right? And bank is a banking institution. So artificial person and therefore personal account. Bombay University, it is an institution, personal account. Building account, it is an asset, real account. Rent account, it is an expense, nominal account. Then stationery, stationery is nominal account, expense for the firm. Bank loan is it is a liability. Bank loan, here banking institution is giving us a loan, so therefore becomes personal account. Coal gas account, it is an expense, nominal account. Depreciation is expense, therefore nominal account. Then we have sports club account. It is an institution, personal account. Capital account. Capital is the money invested by the owner. So it is the owner's capital. And owner is the person, therefore personal account. Drawings account. Drawing is owner's drawings, personal account. Bad debts, loss for the firm, nominal account. Amul Dairy. Again, Amul Dairy account is a personal account. Then freight account. Freight is an expense. Transportation charges, nominal account. Carriage inward, again transportation charges paid while buying the stock. It's a carriage inward, nominal account. Insurance premium. Insurance premium is the expense for the firm, so nominal account. And repairs account. Repairs are expenses, nominal account. Dividend received account is dividend that the firm has received, so it is an income. Again, income and expenses both fall under nominal account, so therefore it is nominal account. Discount received account, again discount is a gain for the firm, so therefore nominal account. Punjab government's account, so government account are artificial personal account, so therefore personal account. Bad debts recovery account, it is a gain for the firm, the amount that has been declared as bad debt, that will not be recovered, in future that was declared, now they are recovered. So therefore it is a nominal account. Discount allowed is we have given discount to the customer, so that becomes expense for us, loss for us, therefore nominal account. I hope you are able to identify various accounts and various items, right? So you need to also practice identifying various accounts, types of accounts from the other sources as well, so in order to have a good practice for the preparation of the books. Next we talk about the golden rules of accounting. So we have seen the personal account, right? So person can be a receiver or giver. So when a person is a receiver, we need to debit the receiver. When a person is a giver, we need to credit the giver. So before we move on to the rules of the accounts, what we need to understand is the two terms debit and credit. So debit means if we divide the sheet into two parts, so the left hand side would be debit side and the right hand side would be credit side. So it is a simple bifurcation, no other meaning for debit and credit here. So left side would be debit side and the right side would be credit side. So talking about the again the personal account. So if the person is a receiver, he would be debited. If a person is a giver, he would be credited. Talking about the real account. So real account deals in assets, and therefore when the assets are there, there is the chance that the asset is coming in the business or it is going out of the business. So assets, in case of assets, what rule that we have is debit what comes in and credit what goes out. So if the asset is coming in the business, then the asset would be debited, and if it is going out of the business, it would be credited. Now talking about the nominal account, debit all expenses and losses and credit all incomes and gains. So debit all the expenses and losses which are incurred in the firm, and you need to identify incomes and gains in the accounting period, and then whatever income or gain that you have, if you identified it as a nominal account and income and gain, then you need to credit that particular transaction. So debit all the expenses and losses, credit all incomes and gains. So in a snapshot, the rules of debit and credit. Rule 1, debit the receiver, credit the giver. Rule 2, debit what comes in, credit what goes out. Rule 3, debit all expenses and losses, credit all incomes and gains. Now, so we have learned till now the various rules of, preparing the books of accounts and rules of debit and credit. We have also identified various types of accounts. So now the recording part starts once we once we identify the types of accounts, once we identify what rules will apply on that particular account, so we start recording in the book called journal. Now the journal is the book of original entry. Journal is also identified as book of crucial entry, which registers transactions in sequential order. The journal is a book where all transactions are recorded immediately when they take place, which is then classified and transferred into concerned account known as ledger. A journal or book of unique entry is the place where journal entries are recorded before they are posted to the ledger accounts. A journal is a record of all the transactions a company has recorded. Now, a journal can be a single entry and a compound entry. Single entry means when we only have one debit and one corresponding credit. Compound entry means when we have more than one debit or we have more than one credit. So that becomes compound entry. So simply telling, single entry having one debit and a corresponding credit is a single entry. Compound entry is entry having one debit and more than one credit, or entry having more than one debit for a single debit, or two or more debit and two or more credits. In the case of composite entry or compound entry, it should be kept in mind that the total of debit and credit should be equal. Otherwise, it would be assumed that you have made a mistake in the transaction or there is some omit in the entry. That means you have not recorded any one side of the entry. So whenever you are passing a journal entry, either single entry or a compound entry, it is very important for you to understand that the total of debit and credit of each entry has to be equal. The journal provides a complete listing of the daily transactions of a business. It does not provide information about a specific account in one place. For example, to know how much cash balance we have, the accounting clerk would have to check all the journal entries in which cash is involved. And this is very laborious job because there are hundreds or even thousands of cash transactions recorded on different pages of journal. To avoid this difficulty, the debit and credit of journalized transactions are transferred to ledger accounts. Thus, all the changes for a single account are located in one place, and this place is ledger. This makes it easy to determine the current balance of any account. Thus, journal is a book of accounts in which all day-to-day business transactions are recorded in a chronological order, in the order of their occurrence. Transactions when recorded in the journal are known as journal entries. It is the book in which transactions are recorded for the first time. Journal is also known as book of original record or book of original entry or book of primary entry. So when we talk about the journal here, we have spoken in the earlier videos that the transactions should be recorded and physical evidence must be there for all the transactions that we are recording in the books, and that is for the purpose of the auditing. So therefore there are various supportive documents which can be used for the supportive purposes, for physical evidence purposes, and these specific sources can be various vouchers, invoices, cash memos, etc. So let us have a recap of the source documents. So as we already know, accounting deals in the facts which actually happens and can be verified by a documentary evidence known as source document. It shows that source documents are real, visible, legible and meaningful records certifying the actual happening of the transactions. In accountancy, every journal entry must be supported by a source document, popularly known as vouchers. Some important documents which can be discussed here at this point of time is cash memo. It is a document indicating the amount, date, details of cash purchases and cash sales. We receive cash memo on cash purchases and issue cash memo on sales. On the basis of these memos, cash purchases, cash sales, cash payments are recorded in the books. Then we talk about invoices and bills. These documents, invoices and bills, are used for credit purchases and credit sales. In case of credit sale of goods, we issue invoices or bills which indicate the date, amount and details of the sales. We prepare 3 copies of invoices. First copy is sent to the purchaser through post office or bank. The second copy is kept in the bundles, packet or cases of the goods. Third copy is retained with the firm. Third copy is used for source document for recording credit sales. In case of credit purchases of goods, we receive the invoices or bills and record credit purchases on its basis. Then we have the receipts. In case of receiving amount, the firm issues a receipt indicating the date and amount of payment, details of the payer and the purpose of the payment. The counterfoil or the carbon copy of the receipt issued is used as a source document for the receipt of the amount. In the same way, we make the payment and we are issued receipt, record the payment in the books of accounts. We can also have a pay-in slip. In case of depositing cash and checks in the bank, we have to fill up the pay-in slip or deposit slip. Main body of the pay-in slip is retained by the bank and counterfoil duly signed and stamped is returned to the customer. Counterfoil is used for the source document for recording all the deposits. Then we can have checks also as the source document. We issue checks against different payments. The counterfoil of the checks or notes on the checkbook contains details of the payment for recording the payment or withdrawal of the amount for self. Checks received are deposited into bank through pay-in slip, which is used as a source document. Then we use the debit note. In case of the return of the goods purchased on credit, we issue debit note to the seller, meaning that seller's account has been debited with the amount of purchases returned. This debit note is used as a source document for recording purchase return. A format of debit note is given as under. So debit note contains the name of the firm issuing the note, address, date of the issue, against the supplier's name, goods returned as per delivery, challan number, and the amount and signature of the manager with date. Credit note. In case of sales returned by our customers, we issue credit note to them, meaning that customer's account is credited with the amount of sales returned. Credit note is used as a source document and has the same kind of a format which is debit note has, and it has the customer's name and amount and signature. I hope you have understood the types of accounts, various rules which are golden rules of accounting, what is the process of journal and the importance of journal and various source documents. So I hope you have enjoyed the video and you had a great learning in this video. Thank you so much. Have a nice day.